then I guess 540.
What'd you get, Matt? Is everybody back?
Wait, wrong.
The rooms are closed. Okay. Okay. So for this one, we go to the income statement and we start with our EBIT number of 2,400. The nice thing with this problem is there's no non-operating expenses. So we can go back to the formula where we don't have to worry about our investments. So we have our EBIT of 2,400. Our tax rate's 40%, which gives us taxes of 960 to get to NOPAT of 1440. In problem 12, the question Stephanie asked is they told us depreciation was 2,000. Why? Because we needed it over here. So now we know that there's that depreciation number that we have to add back.
Where's the depreciation number coming from?
In problem 12, they said at the third bullet, it said, and net property, plant, and equipment increased in proportion to the increase in revenues, and depreciation expense was $2,000.
Where does it show up on the income statement that we're adding it back in?
In the income statement, they just, in this problem, they consolidated and they lumped it all into cost of goods sold. So it's in there, or yeah, it's in there, or it's in operating expenses. Probably operating expenses, they probably lumped it in there. They didn't break it out on the income statement. So they had to give it to us in problem 12 in order to do the free cash flow calculation.
But that doesn't, I mean, based on the problem, they said it's based on revenue, so they couldn't have added in there. Otherwise, you'd have had the, percentage of revenue plus the 2,000. It wouldn't have equaled percentage of revenue then.
But it could be that their operating expenses are traditionally a percentage, and that includes their depreciation expense. It's why when you pull the data for your companies, you need to make sure that it's not so consolidated that you can't pull out these numbers. This problem, to simplify, they lumped a lot of things together, and so problem 12 told us that depreciation was 2,000. It is net property, plant, and equipment, so you couldn't see it from there on the balance sheet. They didn't split it out in the income statement, so they had to give it to us. Okay, so we have our NOPAT number of 1440, our EBIT minus our taxes, add in our depreciation. Now we have to look at our working capital accounts. And so that is your accounts receivable plus your inventories, your short-term assets, minus your accounts payable. That's your net working capital. So in problem 7-6, we see that our accounts receivable were 6,000. Our inventories were 9,500. So we add that together, that's 15,500. And we subtract out our accounts payable of 7,200 to get to net working capital of 8,300 in 2015. In 2016, it goes to 7,200 for accounts receivable, plus 11,400 for my inventories, and subtract out 8,640 for my accounts payable to get to 9,960. The difference between those numbers is 1,660. Everybody see how we got the working capital number? Okay, Mark, and again for this capital expenditure, we look at our property, plant, and equipment in 2015 is 17,000. In 2016, it has grown to 20,400, but we pulled out 2,000. So it increased by 3,400, but we have to add in another 2,000 because that depreciation was pulled out of that net number. So our capital expenditure is 5,400 to get to our free cash flow number of 3,620.
I'm sorry, Professor. Can you repeat the CapEx for me, please?
Yes. So the property, plant, and equipment is where we get our capital expenditures. It was 17,000 in 2015. It jumps to 20,400 in 2016. And the way we find the difference in our capital expenditure, it's capital expenditure 2016 minus 2015, but then you have to add in depreciation because depreciation was also subtracted out of that. So whereas it looks on the books like it only increased by 3,400, there's another 2,000 of depreciation that's been pulled out. So it actually changed by 5,400. It's a use.
Okay.
Make sense?
Thank you. Yes, I got it. Thank you so much.
Everybody good on that problem?
The increase in operating network capital gains, change in AR. You added change in AR.
Go
So
ahead.
$1,200.
Mm-hmm.
Change in inventory. Is that right?
Okay, so it went from 6,000 to 7,200 for your accounts receivable. That's a $1,200 increase, and then it went from 9,500 to 11,400. So that's a $1,900 increase in your inventories, and then you subtract out the change in your accounts payable, which went from 7,200 to 8,640. So that's a 1,440 increase.
I gotcha. Yep. Thank
Got
you.
it? Okay. Any other questions on this one? Okay, so let me tell you what we're going to do next time. I appreciate you hanging in here. I know we're long. We're going to, and Bennett, I did open up the PowerPoint for you. Unfortunately, I forgot until after the break, so I apologize for taking so long to give you those numbers. Next time, we're going to look through this chapter again. And any other questions? Let's answer questions on this one. We're going to do problem 14. Read chapter 7. We're going to touch on 7, but I want to spend the bulk of the time working on the problems that you're going to have with your companies. So if you would, go in and download the Capital IQ. The instructions are on our Moodle page. So you should log into Capital IQ, get an account, and then load the add-ins into your Excel file, because we're going to work with all that. And you're going to be able to pull a whole lot of data. I'll bring at least one, maybe two Bloomberg terminals with me, and then we have the one in the computer lab that we'll be able to use as well. So we're going to start playing with your data a good bit next time. I'll finish up a little bit to refine this analysis a little bit further, but I want to get us far enough so that you're going to be able to complete the first part of your project here pretty quickly. It's due October 22nd. That's the point where I look at it, send you feedback back, and it's not graded, and then you kind of start massaging it as we continue on through the semester. So look at chapter 6 if there's any questions you have. When we come back, we'll finish up problem 14 at the end of this chapter. We may do a little bit of chapter 7, so read chapter 7, but I want to make sure that you have downloaded Capital IQ, read the instructions to get access to Capital IQ on your laptops, and also do the add-ins into Excel. The instructions are all on our Moodle page. If there's something you're missing, let me know. I'm happy to see if I can help. There's also some things in our wiki about Capital IQ as well. We'll play around with that next time. Overall, I think homework went okay. A number of people had trouble with number 8. Amazingly, number 8 technically doesn't have an error in it, but people misread it, and so I understand why the misreading occurred. So I'm giving credit for a lot of those number 8s, even if you didn't come up with the same answer that the homework said you should have. Most of you are doing a pretty good job with homeworks thus far. Any questions on homework or on chapter 6?
Dr. Lynch, I have a quick question.
Yeah.
When did you say homework number 2 was going to be due?
When's homework which due? The second homework?
Yes.
It was due the 25th. I pushed it back a week. It's like October 7th, I think. Let me find my syllabus because I marked it on there. Yeah, it dropped back to October 7th, so 2 weeks. You know how to do most of it. I just didn't want you to be too pressed because I wanted to play around with this a little bit more. But you can go ahead and get started on it if you're so inspired. Any other questions? We are in person next week, so thanks for staying late tonight. I'll try to make it up for you next time. Have a good week. Let me know if any questions come up. Otherwise, I'll see you in Timonium next Tuesday. Bye, guys.
Thank you.
Thank you.
Good night.
See you later.